So, yeah, thanks very much for being back.
Thank you for having me again.
It's been quite a year for Animoca Brands, has it? Tell us about it.
Well, last year. This year will be, I think, much more of a year, I would say. Last year we announced our plans to go public on the NASDAQ through the investment public currency group. That was in November. I think, it's been exciting in the sense that, last year was very much an institutional year. We also announced partnerships around basically our RWAs with like Nuva, which is a partnership with Providence Labs. And we are in a joint venture with Standard Chartered and Hong Kong Telecom around essentially stablecoins in Hong Kong as well. There's been a lot going on. But I would say also last year was an interesting year. I think Anthony sort of touched a little bit on this, in the sense that I think last year everyone was expecting the market to be much bigger and better than it ended up being. And so our general thematic for 26 is that it's kind of deferral. So all the things that should have happened in 25, which includes clarity, are going to happen more likely in 26. But yes, the foundations are laid up. Animoca is preparing to go public. We think we are a strong institutional window for our sector, which is mostly in tokens other than Bitcoin. And our mental lens really is that the future really belongs to these alternative and utility tokens, because that's essentially where we enter the space. Right? Basically, we use altcoins like Ethereum or Solana or gaming tokens or whatever to join the world of crypto, and then from that we might save some in Bitcoin. But yeah, that's our lens. We're the only company in the world currently that can offer that window because of the fact that it's also nested as a balance sheet. At that point, Animoca isn't a fund manager. We invest out of our balance sheet, so the assets are in the suite.
Maybe just to expand on that, if you could give a 1-minute description of what Animoca Brands is about.
Yeah, I mean, we think of ourselves as the sort of ultimate gateway to the altcoin economy. It's very much around our view that the world is going to be tokenized. Everything will be tokenized. And so even when we talk about RWAs and people launching new tokens, actually, even if it's an RWA, it is in the altcoin economy per se. Bitcoin to us is basically like gold, right? It's just a digital version of gold. And so just like the markets today, gold will always be the bigger asset. Bitcoin will always be the largest asset in the digital space. However, collectively, just like the stock market, which is roughly 5-6 times the value of gold, basically altcoins will be similar in that equation. But how do you as an investor actually participate in the altcoin space? I mean, one of our portfolio companies, AlphaTon as well, right here, just doing that together with Questmoon, is an example of one in the Ton ecosystem, right? And that's just one token in that ecosystem that drives utility to hundreds of millions of users. Many of the people who are coming from that space, how do you know which token to invest in? It's not that different from 25, 30 years ago, thinking, would you know to invest in Amazon or eBay or Google or Facebook or Apple back in the day? You wouldn't exactly know that, and through us, you could have a window into that gateway. The other thing is also because we're not a fund, you have the ability to take the long view in this, right? Which is you could trade in and out, especially if you're public. But imagine if you're a fund and you got to invest in 2000, 2001, or 2005, companies like Facebook, Amazon, Nvidia, that kind of stuff. You'd be forced to basically liquidate that position 10 years down the road, or 12 years later, which would have been a great return. But the real returns came out much later, right? And of course, because tokens are very liquid instruments as well, we can generate yield. And so we've been generating 9-figure revenues and EBITDA positive basically for the last 4 or 5 years, precisely because of the fact that in crypto it accelerates much faster and you can actually make yield from that. But really we're about the long tail of the asset and bringing exposure to the space.
You've been a public company before.
Yes, in Australia.
You went back to private, now back to public.
Just to clarify,
why is it so important?
We were forced to go private, so to speak. So we were a public company in the Australian Stock Exchange up until 2019. And the fun fact for those of you who care, in the summer of 2019, the Australian Stock Exchange, and you got to remember, for those of you who've been around just sort of the space, 2019 was not a good year for crypto, right? Bitcoin was like $3,000. Everyone talked about the scams, recovering from post-ICO trauma, shall we say. And the Australian Stock Exchange really did not like crypto. So they created a rule in July of 2019 that specifically, I have a gaming background, essentially disallowed gaming companies to issue a token. There's only one company on the Australian Stock Exchange that was basically doing that. So they tailor-made a rule and then 1 month later we got suspended for breach of rules, right? So it just also goes to show that essentially sort of centralized regulatory overreach isn't only happening in places like America. It happens all over the world, right? So we were forced to go essentially sort of private, but actually, funnily enough, right, it was right after that we then had the freedom to do things that we wouldn't have otherwise been able to do, especially in the areas of token launches in our investment portfolio. And that's actually when we became sort of a much larger company. We got our first unicorn valuation in 21. When we were delisted, our market cap was around 40 million or 50 million Australian dollars. So a very much smaller company back in the day. So I think we would not have been able to grow if we were restricted under that environment.
So you went from 40 million when you were delisted to the announcement that was just made in New York was 5 billion?
So there's no valuation set per se. So what happened was it's a reverse merger. So the merger ratio is fixed. It's 95-5, which means that the target company will sort of own 5% of the business. And what's interesting around that some investors have done is that they basically take that and then they multiply the valuation by 20 as a way to indicate an indicative market price. This is not financial advice, so you can do what you want with it. But if you were to take that measure, it was trading very wildly on that day. At one point, I think we were like 20 billion, but it's come down to earth a bit. But yes, we're generally speaking, our last round was raised at $7 billion many years ago.
You just talked about Bitcoin being at 3,000 at one point in 2019. Now, you've gone through so many stages. You've been very early in this industry, and you've lived through the ups and downs. What gave you the confidence and the optimism that the technology, the philosophy behind Web3 would ultimately prevail?
Well, I mean, ultimately, what is the idea of digital asset ownership, as in digital property rights, is sovereign ownership of your assets, which is essentially, a proxy for freedom. If you have the ability to own your property truly, then you have essentially a mechanism in which you can secure your freedom in some form or the other. And if you believe in that conceptually, then there is long-term you're aligned. And I think a lot of people struggle with that initially because they haven't experienced what deplatforming is like. Pre-ASX, we were one of the largest video game sort of mobile.
ASX is the Australian Stock Exchange.
But pre the Australian Stock Exchange experience, we're actually one of the biggest game developers on the Apple App Store. This was in 2011, and in 2012, they didn't like something and they removed all of our apps. We're completely gone. Right? 180 or so apps, or I don't know, some crazy number of apps were gone. 160 people in our office essentially saying, what the hell's going on? We didn't have anyone to call because the king of Apple App Store basically said, we don't like you, but they didn't actually say anything. They just said breach of rules, that's it. Right? And when you think about where the world has headed since, and really before that in preparation, whether this is Facebook, whether this is X, I mean, you can talk about sort of freedom and sort of, but the reality is that the owner of the platform basically gets to decide whether you can exist or not in many ways, right? And I think this is the crux of a lot of the issues that we have in the world today. And so there needs to be a technology that allows that freedom to exist, so at least you have the, not just the ability to express it, but also the ability to be in an area where you can basically sort of balance that power dynamic. And blockchain is, a lot of people looked at it from the freedom of money perspective, right? Bitcoin as an initial way of protecting and hedging against inflation, but also as a way to having this sort of asset in your pocket, as it were, and to basically have a store value that government couldn't touch or a centralized authority couldn't touch, right? That's kind of the thing. And it's also the reason why so many people in crypto are sort of bemoaning a little bit the ETF scenarios and sort of the institutionalization, which, by the way, we think is important. But a lot of them are bemoaning it because they're saying, aren't the institutions coming in and taking that over? And our view is, actually, as long as enough people have it, then it's okay. It's kind of like democracy. You need enough people to vote. You don't need every person to vote. But if you have enough people that vote on it, then you secure at least the basis of the democratic framework. Right? And that's basically, for on-asset ownership, the belief that this would be the case. We started off with games, but we realized it was much, much more than that. And also, we had, in hindsight, we entered into crypto with NFTs in late 2017, early 2018. So we entered when Ethereum was $80. Right? So from our perspective, we had generally good experience, right? If you invested in Ethereum when it was 3,000 or in Bitcoin when it was 10,000 and went all the way down, we may have been more jaded, right? So I think, as is everything in life, sort of circumstance, luck, fortune, yes, conviction, but of course all these things color you as well, right? You could say the same is true for people who may have entered the space shortly before FTX. They would have been traumatized. Doesn't matter how solid your thinking is at the moment in time. You would have told people then, hey, you know what? Crypto is the future, blockchain is here to stay. Much harder, right? For us, it was frankly much easier because yes, Bitcoin went all the way down to 16,000. That's because they haven't experienced Bitcoin at 3,000, right? So from their lens, it's a disaster. From our lens, it's like, well, generally it's up, so we're positive.
Talking about these various cycles, is there anything that can make you uneasy?
Okay, so I mean, look, I think I think for me, I think we're in a fortunate position where it's, I don't have to worry about this sort of the day-to-day, and so it's about the impact, right? So the uneasiness comes more around, is this something that we think will hurt people? That would be uneasy, right? Is it something that will affect my family negatively? That'd be uneasy. But generally speaking, I feel that what we're moving forward to is for the profit good. So that keeps me going. It doesn't really matter that there's swings or there's cycles. The other thing also, a lot of people are critical of volatility in crypto, and I understand the sentiment, but I think it's a mistake to not embrace the volatility. And what I mean by that is that we say we live in a capitalist environment, even though most people aren't capitalists because we don't have capital. It's a different topic. And capitalism is about volatility. The stock market, commodity prices tell you what's going on in the world. And so some people respond to it by saying we want to be more open and we want to be more informative around this and to embrace it. But many places, Europe especially, are trying to tame capitalism. It's not so much that they don't see the mechanisms and say this information is valuable, it's that we don't like that volatility, we want to control it, the ups and the downs, which I think to me essentially creates a kind of distortion of the true nature of it, which means that we don't get true information if we try to tame it this way. So take the job market. I mean, if you actually were to measure the number of people that will lose their job every week and gain their job every week, it's not a flat chart. It's like this. If you take a look at how many companies close and open on a daily basis around the world, it's super volatile. But we don't measure that. Our statistic is annualized, we take the average around, right? But for the person living these lives, it's absolutely not stable, right? It's very, very volatile. And what blockchain and the 24/7 and crypto and tokens do, they just simply show the reality of what's happening in the markets. I mean, what if the stock market was trading 24/7? We wouldn't have 9 to 5 circuit breakers and stops. It would go volatile as well. I'm not saying there shouldn't be safeguards. I'm just saying the true nature of it is volatile. And as humans, I also think of ourselves generally as risk engines. I mean, if we were not risk engines, we would not have innovation, we would not have growth, we would not have development. We would be still, frankly, in the Stone Age, hanging around with the animals, right, that are out there, because we would never innovate and change. Every innovation comes with disruption, that comes with change. That can be very dramatic and sometimes also deadly, unfortunately. But that is the part of our nature. And capitalism is just, let's call it a financial version of this, but it is the same nature. Right? So I don't think we should understand it better, but I think we should embrace that understanding rather than reject it, which I think is part of the problem we have in the world today.
I think it's fair to call you a wanderer between the worlds because you grew up in different cultures and you, I don't know, whenever you're at home, I have the feeling you're traveling 300 days out of
I do go home, but yes.
365. Is there anything that, especially in Europe, we should do to look different at capitalism, building on what you just said, that you would advise us?
Yeah, so I grew up in Austria, so I never knew anything about money until I basically started a job and I went to the US. Experienced capitalism over there. And again,
because we don't talk about
money. And I think actually the biggest problem I think Europe has, because there's so much that Europe has going for it in some ways, is that money is basically something you don't talk about. German expression, verpönt. That's basically what people think about it. My mom is a musician, and she never knew about money. So she ended up basically getting taken advantage by all the people who have money. So of course her opinion of agents and people with money is bad, right? But also because she doesn't understand it either. She could negotiate. I mean, think about the music industry as well. Michael Jackson ultimately had an asset base of Taylor Swift because they own their asset as opposed to selling it out, right? That was the innovation that Michael Jackson did, which is not that innovative if you think about it. To say, you know what, I need to own my own record label. I need to own my own rights in order for him to do that. And then that set sort of a path, right? Because he somehow understood that was important, but most people don't. And I think this idea of let's not talk about money, part of it might be cultural, of course, but I think part of it is also for the institutions that have power to say that's good. It's another form of illiteracy, right? I mean, won't name the countries in question, but some famous dictators would say, I don't want my population to know how to read because I can control them better. So what happens when you say to indirectly, you make a population not know about money? You can control them better, right? If I don't know about money, then I'll just do what someone tells me to do who pays me money, as opposed to sort of become an entrepreneur or try something or build something, right? And then the political fabric changes around that as well, right? So I think money is really important. And now, of course, you've created a culture where you can talk about that. A story I keep repeating, but it's worth mentioning. When I go to Asia, in Hong Kong, first time I went there, I was in my early 20s, and I saw a father teach his 5 or 6 year old how to gamble on horses on the trade right. And imagine that idea here or in Austria, right? I mean, they would be ostracized from their family and society for turning them into some kind of DJ. But actually, this was about just social cohesion. It was more like, you can bet on this, and this father was making a connection with the child. When you go in the streets of Hong Kong or Chinatown, you hear the clashing or the mahjong marbles. It's not that people make fortunes on it. They have fun with money. They're not afraid of it, right? And so it's not to say money can be bad, but it can also be good. At the end of the day, everyone does want to have some money to have a better life, but they're afraid to talk about it, and it just brings it up in the open. So in Asia, for instance, money is a part that makes friendships. I think in crypto and blockchain and business you see this, but broadly speaking, people don't make connections to business. They don't think of it this way. They separate it. My work is here, but my social is here. But actually, money is a form that bonds people. And this is why crypto is so powerful, because it actually creates an even deeper bond, basically for people who own tokens, because they have value as an asset. So it's not just social networks. In fact, likes and follows are a form of currency. The only difference is that currency is not one that is owned by you, that you have agency over, it's owned by someone else. So you're borrowing someone else's currency to try to create that rank, and then suddenly you end up working for them. Very similar, right? So we actually already always exchange in value, whether we call it a dollar figure or not, right? Every relationship we have, there's a form in our mind where we calculate some form of value, intrinsic or not, right? And it may seem not nice to say you're worth this, you're worth that, I get that, but we're already trying to measure things in value anyway. And tokens just become a measure that does it. I think the problem is that because money is a one-dimensional way of measuring the world, right? And I feel like tokens is a much more multi-dimensional way in which you can basically do that. And we express it differently. Suddenly we start buying luxury goods as another way of expressing our value to others, or where we live, right? Which is also a form of value. It's just not expressed purely in money.
I can already see the headline of a LinkedIn post. Yat Siu tells parents to take their 6-year-old kids to horse racing and.
Well, and just to do stuff with money, I think. Yeah, exactly. But yes, yeah.
That's quite something. If you could go back to your beginnings of Animoca, you said you founded Animoca Brands when?
2011.
2011. Okay. If you could go back, is there anything you would do differently with the knowledge you have today?
So, I mean,
besides buying more Bitcoin.
Yeah, yes, besides buying more Bitcoin. I mean, in general, I think coulda, woulda, shoulda. I'm not the kind of person that looks back and says, how could I do things differently? Because the path from where we are today came from the lessons and the failures that we did before. Right? So, yeah, I mean, maybe I should have bought Bitcoin, but for example, if Bitcoin went down, right, maybe the path and how we would have looked at basically the blockchain crypto space in 2017, 2018 will look entirely different. So I don't look at it that way. I look at each, frankly, failure as well as a kind of lesson that will help propel us sort of further. So I don't typically look back and say, I wish we would have done this better. There's always things you could have done better, but it's those lessons that help us become better in the future.
Can I ask you a personal question? We've known you for almost 4 years, and you're a friend of the company, Sagar. You were very, very close.
I'm also a happy LP, so yes.
You're also a happy investor in our fund. Thank you very much. You're very extremely modest. You're not wearing expensive clothes, watches, nothing. What does success mean for you?
So, I mean, the general mantra for me is I want to live a life of impact and purpose. I said this before. There are other assets that I have that I spend money on because I think of them as more as relevant to legacy. I have a lot of NFTs, and just to make this point, right? NFTs are down 80% for most of them, but I will never sell them because they're also part of my identity, and it's also my signaling to the community. The moment I sell an NFT, the rest of the community goes, what does it mean? Not just from a signaling standpoint, but also, am I kind of abandoning them or am I not having confidence in them, right? So to me, that's what this means, right? It doesn't mean, money to me is a means to an end, to something greater, right? And by the way, that's what I think what most people in the world think of. I think there's a small cohort in the world that live for money as the end in itself. And they're mostly in finance, naturally. That's why they went there, right? But if I look at my mother, if I look at my mother's friends, if I look at most of my friends who are not in the world of finance, which is most of the world, that's not what they think of. They don't think about money making for means of just making money. They think about the good life, they think about happiness in different ways, they think of entertaining, they think of traveling, they think of other ways. Money is just the means towards that, right? And so I think maybe the reason why this seems different is because I don't come from the finance world. I was a trained musician, then I went into programming, just coincidentally I went into tech, I wanted to build businesses, but it was never about the money in and of itself, right? And you see this in places like Silicon Valley as well, where they want to build an impact, they build a great business, and the money comes, sometimes not, but when it does really well, then the money comes as a result. And then of course, because there's money, then the group of people in the money space flock around it, and suddenly it turns all around money. But the companies with the biggest impacts typically never started with this. I mean, look at the largest company by market cap, NVIDIA. I mean, Jensen isn't out there saying, I'm doing this for money. In fact, he started off with gaming, right? Building GPUs to have a better gaming experience. And now he has built a business that is impactful in an area that touches money in a big way, but that's not why he did it. Elon Musk famously, PayPal Mafia, when he made money, he had to literally live in a friend's home because he used all of his money to build the future that he believed in. Regardless of whether you agree in what Musk is doing or not, the point is that, again, money was a means to an end for his purposes, and now he has so much money that he does a few things for his purposes that people could disagree, especially in Europe but that's beside the point, right? Money is not why he does it.
In 30 years from now, what do you want to be remembered for? And I hope you will be alive and kicking and amazing the worlds with your adventures. But if somebody was to write a book about you in like 30 years, there are many books about Elon. What would be the title? What would you like to be remembered for?
So I actually don't think about that too much because I think personally I think it's a little bit vainglorious to think about what the future would think about that way. I care a little bit more about the present and where I want to build towards it. I think what I would love to do is leave a legacy behind that has made the world a better place. I know with the World Economic Forum it sounds very topical, but I think of the thing of, I would love to be able to say that I've lived a life with little to no regrets, right? And that I've been able to basically make an impact to people that are sort of in this field, right? Which to me is also what fuels me and I think our business and the way we think about life, which is, if you're building on a purpose that's greater than your own, then you can sacrifice. You can go and meet people. You can travel the world and maybe not see your family as often as you want to, because this seems to be more important than something else, right? So I think that's important. And when you invest in founders, you also want to look for founders who sort of generally believe in the same thing, where it becomes so important.
Yeah, always a pleasure having you. Always a pleasure talking to you. Thank you very much. Ladies and gentlemen, Yat Siu.
Thank you.